Hello traders, this is Alla Peters, founder of Fibonacci Trading Institute and Proprietary Fibonacci Method. In this webinar, I will be educating you about Fibonacci. I will be showing you how you can use Fibonacci in your personal trading and investment decisions. And I will be teaching you lesson 1, what I teach in the course, along answering your questions about various instruments you would like me to analyze for you. So please think of the instrument and please remember, everything I do in this webinar I do for educational purposes. Please remember, trading is serious business and never ever trade with risks you cannot afford. Please remember, past performance never indicative of future results. So, what we'll be covering in this webinar? I will be sharing what Fibonacci is all about, what Fibonacci forms and present in the markets. I will be sharing with you proprietary Fibonacci method. I will be showing you difference between Fibonacci versus indicators, and I will be sharing with you answering questions about instruments of your choice. So shall we start again? So, if you have any questions about settings, please find the settings tab in upper right corner and adjust the settings in accordance to your computer. So, let's start, shall we? Everything I will be sharing with you in this webinar applies to any instrument, any time frame, any platform. This is what's absolutely crucial to understand and analyze. Every single price action, every single market structure is identical on any instrument, any platform, and any time frame. Here's a couple of examples. This is S&P E-mini future, the most popular day trading instrument in US. This has exact same price action and exact same structure as the following instrument. Let's ask everybody what they think. What instrument is this? Take a look on this and make a guess. Pretty please. What is this? Anyone would like to take a guess? Why would that matter? It makes no difference whatsoever. It doesn't matter if it's S&P mini future. It doesn't matter if it's Euro. Here's a couple more examples. It doesn't matter if it's this instrument. What is the common denominator between all of them? What instrument is this? Pretty please tell me. What is it? No one knows. This can be anything. This can be S&P, this can be Euro, this can be Pound, this can be the top stock held in US, Apple. They look all identical because they have all identical patterns. They have all identical price action. So, why spend your time on anything other than this, what's in front of you? Why not master price and recognize that every single thing developed after the price? That's the only thing that's current between every single instrument that you will see in this webinar is price. Every single instrument on the planet has price. If strategy works, it works on any instrument, any time frame, any platform, because market formed by price and Fibonacci. Every single pattern in front of you is not random. Every single pattern formed by Fibonacci sequence. And that's what I recognized very clearly in 2008 when I witnessed stocks that had stunning fundamentals, stunning earnings, were collapsing into oblivion. This was a stock I was holding in 2008, Chesapeake Energy. Chesapeake Energy had stunning earnings. Chesapeake Energy had solid fundamentals. Chesapeake Energy was crashing into oblivion, and all the fundamental analysts were stating, hold this stock, don't get out of the markets. In 2008, I recognized very, very clearly, if fundamentals worked, everyone on the planet would be Bill Gates. I recognized very, very clearly that there is a lot more to price action and market. That market formed by Fibonacci puzzle. Chesapeake Energy collapsed because it reached reversal zone. This is exact same place where all the indexes are now. This is S&P now on monthly chart. This is a chart that's been present in the trading room for years. S&P doing drastically different structure than Chesapeake Energy. S&P doing massive correction. However, the fact that S&P reached reversal zone should be quite a concern. What's holding the sell-off on S&P? This support. It's only bearish correction. S&P is not in free fall yet. This is what's holding this market from collapsing. This support present in the room for years on monthly chart. And just to remind you, as you will witness throughout webinar, what separates S&P with this chart from all the other charts that are cluttered with indicators, market formed by Fibonacci sequence, giving you all these levels in advance. This is S&P from the trading room in 2016. Do you remember this crucial Fibonacci support at 1800 number? This is 2016. Support respected. What did market do? Price skyrocketed until 2800. We're selling pressure in a play currently. What else is important to recognize? Identical price action applies to day trading decisions. As you will see, exact same sequence on 1, 2, 3, 4, 5, 6, 7, 11, any day trading chart you will use. Identical structure in our day trading room every day, as you will receive invitation to the trading room throughout the following week. So, S&P respected 1800 number on monthly in correction in 2014-2015 and skyrocketed to reversal zone at 2800. What else is important to remember? What was it on shorter time frames? On weekly, it was trend inception, 1800 trend inception. Take a look on this chart. So, as you saw, this was trend inception and this was ultimate target in counter trend move, the end of the minor trend. This is where S&P struggled for the following 6 months. This is exact same thing Apple had done prior to earnings this week. So, we will walk down memory lane and we'll remember that all these levels identified by Fibonacci far in advance. This is Apple prior to earnings. This was a dance on Apple. Do you remember this crucial support on Apple? I posted on social media, YouTube channel and here in the trading room that this is key support to monitor for reversal. This is where Apple staged powerful bullish rally from. Apple is no longer at 163. Apple at drastically higher levels. Support respected and Apple skyrocketed, breaking through this resistance just like S&P had done on this chart. This is S&P now on weekly. This is where market is. This was market 2016. And this is what we're dealing with on weekly. Every single chart, identical strategy. Every single chart, identical price action. What is the difference? Do you use this for your investment decision? Do you use this on S&P? Do you use this on Apple? Do you use this on Euro? Doesn't matter. Choice is yours. Strategy, price action patterns remain the same. The only difference? Liquidity and risk management. If you're holding position 5 minutes, 5 hours, 5 days, or 5 weeks. This is chart from our day trading room. Do you remember 1800 on weekly trend inception? This was trend inception on day trading chart on May 3rd. Identical strategy when S&P was at 2600. Bullish rally right now, overextended. This is exactly the reason why price is taking such a massive pause and market not doing much. Trend inception, rules are met, take a trade. Everything preset in market by Fibonacci levels, independently of any news. As we also witnessed yesterday at the time of Trump's announcement about Iran, when oil skyrocketed from crucial Fibonacci support. This was the announcement about Iran. This was oil in the room for weeks. Trend inception last week, despite extremely bearish news on oil, because Fibonacci said so. Trend inception despite horrific news on Iran, oil skyrocketed. On any chart, tick chart, range chart, minute chart, because Fibonacci said so. Fibonacci what forms market puzzle. Fibonacci is what gives you these levels. Minutes, hours, days in advance on day trading charts, weeks, months and years on your long-term position charts. On any instrument, any time frame, any platform. For your future stocks, option, Forex, ETFs, anything that has price, method and Fibonacci applies to. So what is Fibonacci? Fibonacci golden ratio was discovered by Leonardo Pisano in 13th century. This special mathematical sequence creates repetitive spirals and triangles which are present in nature and also forms financial markets. Exact same sequence that you're finding in seashell that give you structure and starts from the seed on every single flower, on every single tree, is formed in the market. Exact same sequence at present in weather patterns, how the hurricanes, how the storm starts, the eye of the storm is what forms the market. Exact same sequence at present in human body that creates the perfect symmetry is what present in the markets. And that was discovered by Leonardo Pisano in 13th century. That Fibonacci sequence starts from 0. And if you add 0 to 1, you will receive subsequent number 1. If you add 1 to 2, you will receive subsequent number 3. And this is how spiral forms. This is golden ratio that starts trends in the market. This is what happened on Apple in 2016. 2015, when Apple came out with the worst earnings in 13 years. Apple was sitting at crucial Fibonacci support. I said at hedge fund convention, social media, LinkedIn, website, YouTube channel, if this support respected, I don't care what the earnings are. Apple will move up higher to 106 and 111. And that's exact same thing what Apple had done, independently of the worst earnings in 13 years. As we know extremely well, Apple skyrocketed to drastically higher levels, where Apple is now today. This is where Apple is this morning, from 91 horrific earnings to 187. More than double, because Fibonacci said so. Fibonacci support respected, no reason to short the markets. And this is Apple now. And this is why Apple taking a pause. 190 is out, Apple will head to drastically higher levels. As you see, 203, 216 and 229 in front of you. What's important to remember? Knowing where to enter your trade, knowing where to place your stop and target is a key. Just like this level's been present in the trading room for months, this is what price is showing you now. Just like it's shown on S&P. Just like it's shown on Euro. Do you remember what happened on Euro in 2014 when Euro was at reversal zone? One of the most favorite charts in the course. Students call this chart peacock chart. Do you remember Euro 3900? Absolutely no surprise where Euro collapsed from. Baby, can you please mute the dogs? So, here we are. Euro went into free fall. And this is where Euro found ultimate support. Skyrocketing to this resistance. So, this is a market in front of you on every single instrument, every single time frame. Every single strategy identical. Every single strategy has exact same Fibonacci tool and identical sequence. As you will continue witnessing throughout webinar. So, this golden ratio is what forms the market. Market Fibonacci puzzle. Price action and Fibonacci form repetitive patterns which can be capitalized upon in any markets for trade entries and trade targets. This Fibonacci method can be traded in both day trading and investment positions, as well as stocks, futures, Forex, ETFs, and options. So, very important to recognize that Fibonacci and indicators don't have anything in common. Indicators are artificial delayed tools, or the indicators are wishful thinking. If you found indicators that works, it's one indicator in a million. Indicators that works are not for sale. Indicators work by mathematically applying formula to a number of prior periods. Mathematical conditions must be met before indicator plots. When Fibonacci tells you everything you need to know about markets in advance. And that makes a world of difference. Nothing in common between indicators and Fibonacci. So, here's a couple of examples. Here's Ferrari. This is a chart that's been present in a trading room on Ferrari for months. This is exact same structure as you saw on Apple, ultimate Fibonacci resistance, and this is what you learn in the course. Very crucial target. This level is out on Ferrari. Ferrari skyrockets to drastically higher levels. One step at a time. All the same formula. And just to remind you, no matter what instrument you trade, no matter what time frame you trade, this bright pink line identifies the end of the minor trend. This is exact same place where Euro found support. Do you remember Euro in 2016 at crucial Fibonacci support? And do you remember where Euro started finding selling pressure when it reached 24? Identical sequence as Ferrari. Identical strategy. So if you know these targets and this support in advance, why in the world would you ever use delayed indicators? So, Fibonacci is not an indicator. Fibonacci is natural predictive tool. If you take a look on the chart, Fibonacci placed in drastically different place. Fibonacci placed under the tool, not under indicators. However, placing Fibonacci randomly on your chart will never work. Knowing how to apply Fibonacci is what I started devoting all my time in 2008 too, when I developed first strategy that applies to any instrument, any platform, any time frame you will choose to trade. Most efficient and most profitable market entries occur at trend inception. Here's a couple of reminders of what played out in the market. Here's oil in 2016. This is a chart that's been present in the trading room since 2011. Do you remember in 2011 oil at reversal zone? When oil was at 126? Oil went into free fall. Do you remember crucial Fibonacci support on oil at 86? Do you remember this dance on oil throughout the years from 2011 to 2015? Identical structure that we witnessed playing out on Apple in the last few months? Identical dance, identical formula, identical patterns. Oil collapsed to reversal zone. Oil at 30. 2016. This is oil now. Trend inception rules are met. Take a trade. Trend inception at Fibonacci reversal zone. Rules are met. Take a trade. Ultimate point of entry. And oil struggled to the upside this time at famous 55 level for over a year. When oil broke through this level, the end of the minor trend became major. Bullish rally on oil overextended, oil heading to 77. The difference between 2011 to 2016, this is bullish rally. This is trend inception. This is resistance, not support. This resistance is out. Major trend in a play. And this is exact same thing that played out on S&P E-mini futures 3-minute chart. Bullish rally reached reversal zone and price is stalling, price in pain, not doing anything. Price respecting Fibonacci reversal zone and dancing at this range. Exhausted bullish rally. Identical dance as in a play on S&P weekly chart. What is the difference? This is your investment decisions. Identical structure, identical chart as on oil. This is where sell-off had played out. This is your day trading chart, 3-minute chart. Identical Fibonacci tool. Drastically different risk management. You trading this chart, you holding position for minutes, maybe absolute maximum hours. You trading long-term weekly and monthly charts, you holding position for months and years. Are you using this for your option trades? Ultimate point of entry, trend inception. Every time. The same exact strategy, exact same formula, which also played out in our day trading room multiple times throughout the months of April. This is a chart from day trading room. This is trend inception in April 25th, when S&P was very close to 2600. The support that S&P respected, just like oil had done on weekly, just like S&P had done on weekly. Difference is, you don't have to wait for days, weeks and months to see the accuracy of the method. You see it in the trading room every day. And that's the exact same formula on all the other instruments. So every single thing you're witnessing in front of you, I can answer your questions about any instrument you will choose, because price action patterns remain the same, because Fibonacci sequence, Fibonacci strategies remain the same. The only difference, risk management and trader's mentality. I work with traders from beginner to hedge fund manager who trading method in US and globally using exact same strategies. What is the difference? Every single one of these traders trading different account size. Every single one of these traders has different circumstances and chooses to trade different instrument. Risk management is the only difference. Fibonacci retracements cannot be traded without strict set of rules. Fibonacci Trading Institute utilizes our own proprietary Fibonacci tooling strategies. So, here's extremely crucial and very important moment. There is no software, there is no indicators of any kind. Every single trade based on precise rules for price, for entry and Fibonacci for exits. On any instrument you will choose to trade using this method. This is the core of the market, traders. Market formed by 5 price action waves. Every single one of these waves is not random. Every single one of these waves formed by Fibonacci sequence. If trend is major, market consists of 5 waves. If trend is minor, market consists in 3 waves. Knowledgeable trader monitors for point of entry at trend inception, as you saw in previous example on oil. This is exact same example on Facebook. This is sell-off on Facebook in 2017. Facebook collapsed. No problems in Facebook in 2017. However, reversal zone is reached. Rules are met. Exit the position or place a short. This is exact same rule in a play on Tesla. Chart present in a trading room for years. Tesla collapsed because it reached reversal zone. Tesla been sitting at this crucial Fibonacci support, famous 300 number, that currently ultimate resistance. Tesla is heading drastically higher, 335. Level present in the room for years. Knowing how to enter the trade on Tesla, you must know the rules. You cannot pull a trigger randomly. This is wave 3 on Tesla. This is trend inception, counter trend move from the end of the minor trend. Wave 1. This is wave 2. You never want to touch wave 2. Wave 2 counter trend move. Wave 2 very weak structure. You're only interested in trend moves, entering at the inception of wave 3. And that's what price does every time. Doesn't matter if it's euro, if it's Facebook, if it's S&P, if it's oil, if it's Tesla. So, if Tesla forms only 3 waves, Tesla extremely weak. Counter trend move. Major trend, 5 wave formations. This was major trend to the upside on Tesla. This was what Tesla had done. This is wave 1. This is wave 2. Do not touch. This is wave 3. Take a trade. And always and forever remember, never ever 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 touch wave 4. Never ever ever enter into reversal zone. No matter how spectacular the earnings are, it will never work. Price collapses from reversal zone 85+% of the time. And that's what Tesla had done. No problems in Tesla when Tesla was at 388. Problems in Tesla had started when Tesla was already here. $80 later. So, all the same formula, traders. Exact same thing currently playing out on euro. Look at that. Ouch! This is euro daily. This is very crucial reminder. You learn in the course, decision point 2 is your key target. This was range on euro daily. Crucial Fibonacci support. Ultimate reminder. There is a very good reason why I made it so bright pink. When I worked in Johns Hopkins research, I saw an impact of bright pink color on human brain. And that's exactly why it's so bright pink. It's never to be ignored. And that's exactly what Apple doing now. Remember that? Bright pink support and bright pink. If I could only find that chart on Apple. Keeps hiding on me. 1 second, please. This is one knowledgeable trader moving his stop outside of break-even. This is ultimate target on every single trade. Price not always make it to reversal zone. Price can collapse from decision point 2 completely, as its ultimate reminder of what's playing out currently on euro. Most important target, no matter what you trade, decision point 2. Every day, every time in our trading room. And that would be the key on Tesla. And that's where Apple is now. All the same formula. Facebook is heading drastically higher. Do you know what to do with your position on Facebook? Do you know where to enter and place your stop and target? That's the key. Or do you call long-term investment positions paper? In day trading, you cannot afford to call it paper. In day trading, every single tick matters. But price spelled out that price is heading drastically higher on Facebook, as it's done on S&P, as it's done on oil, as it's done on Apple. And that's what price does every time, using this formula across all instruments. 5-wave pattern, close a trade. 3-wave pattern, trend is minor. Move your stop outside of break-even, take profits off the table. Do not ever trade counter trend wave 2. Do not ever trade counter trend wave 4, only wave 1, wave 3. If you start acquiring positions at the end of wave 3, you entering into brick wall, you entering into reversal zone where trend ends. So, ultimate point of entry at trend inception. As again played out in the markets last week, multiple times on S&P and oil. So please, if you missed the events in the trading room, you can always come to the website and take a look on our YouTube channel. So let me browse you through the website and where you can browse years and years of videos. So if you come to YouTube channel, you can see what played out in the room yesterday on oil. You can see what played out at the time of FOMC. And if you would like to subscribe to our videos, you will receive notification every single time I post new video. And that's the video I mentioned that just been posted of the event yesterday about Iran announcement. So, all the same strategies. Ultimate reminder. Never short near reversal zone. Ultimate point of entry at trend inception. Ultimate point of entry at trend reversal. All the same, no matter what you trade. Using this formula, using this strategy. This is identical price action on Nasdaq, showing you exact same strategy, showing you exact same formula. 5-way pattern, price reverses completely. So, in summary, what you witnessed throughout the webinar, pure price for entry and Fibonacci for exits. Two key concepts what forms the markets. Fibonacci and price. No software, no indicators. Any market, any time frame, any platform. And that's the core of the method, traders. And that's, you master this, you never need anything else. When I attend hedge fund conventions, I learn a lot about hedge fund world. It never ceases to amaze me how hedge funds making their decisions. And here's one of the most admired hedge funds on the planet, Renaissance Fund. I highly encourage you, please Google and research what the fund is based on. Fund is founded by mathematician who is using Fibonacci. This is a fund that's one of the most accomplished and most successful hedge fund on the planet using Fibonacci sequence. One of the biggest questions I always receive, does this involve math? It does not. It involves pattern recognition, and what you learn in the course is precise rules for entries, stops, and targets. You remember not to use indicators. You remember that indicators not giving you any clarity, indicators only confuse you. Indicators do not teach you anything about markets. So why spend your time on anything other than price action and Fibonacci? Why not trade with clarity? No unnecessary variables, efficient decision making, uninhibited view of the markets, no conflicting signals, trade with clear mindset based on the rules, pure price for entry and Fibonacci for exits, all you need. In a summary, Fibonacci is a highly accurate predictive mathematical sequence to identify profit targets on any time frame. You want to take profit targets on Apple before the earnings? You want to identify key support on Apple before the earnings? You can do this on any instrument. Do you want to do exact same sequence in your day trading decisions? Why not? Exact same sequence. Fibonacci retracement levels are key to Fibonacci Trading Room method. So the fund I mentioned prior was founded in 1982 by James Simmons. One of the most successful hedge funds in the world is my role model. The asset management under 84 million. His worst year was in 2013, 21% gain after all fees. Simply the fact. So, Fibonacci holds the bar very, very high. Please remember one thing. If using fundamentals and indicators worked, every single person on the planet would be Bill Gates. What actually works is price and Fibonacci. And that's the reason I work with traders from beginner to hedge fund manager. And that's the reason I'm extremely proud by method I developed. So if you come to the website, under About you can read more about the method. You can view prior videos. Under Learn you can review the information about course. Group course 8 weeks, private mentoring 16. All classes are live. Just like I teach you now, I work with students in the classroom. Private mentoring 16 weeks includes all group classes, includes trading room, includes proprietary Fibonacci retracement tool, includes proprietary Fibonacci strategies. When I work with you one-on-one in private mentoring, I concentrate on your execution and instrument on your choice. We work via Skype and TeamViewer. Most important part of the website, what students have to say about method. So please listen to the students. From Pablo, beginner trader in Spain who is doing extremely well, to Victor, Forex trader, hedge fund manager in Switzerland, to Carol, oil futures trader in Dallas, Michael, option trader in Sacramento. Every single trader different account. Every single trader trades different instrument in US and globally. So, if you would like to join us in the course, pretty please review all the information on the website and never hesitate to contact me. 925-257-4298 or info@fibinstitute.com. And again, YouTube channel, you can browse videos going back years. Very important Fibonacci class in the course this Friday, when we're reviewing charts from hourly to monthly, going back all the way to 2008, where you witness how you can benefit from Fibonacci no matter if market is in crisis or not. So, this is what I prepared for you, ladies and gentlemen, in this webinar, and I look forward answering your questions. So feel free to ask me questions about any instrument you will choose, any time frame you will choose, and I will gladly show you how to use Fibonacci strategies on your instrument. So here's a question about EURUSD daily. Euro sold off completely, no surprise. This key Fibonacci support is out, Euro went into free fall. This is not the place or time to short Euro. This is the time and place to monitor for reversal. Let me show you why. And this is exactly a very crucial reminder where it's not to short Euro anywhere near here. This is a price where you want to monitor for bullish rally. Two things will happen. 85% of the time, price will stage bullish rally. Knowing the rules for bullish rally is a key. The other 15 to 20%, price will give you only correction. But this is where a knowledgeable trader monitoring for trend inception, as you saw on oil, as you saw on S&P. Exact same thing can play out on Euro, as Euro at reversal zone. Remember S&P at reversal zone? This is where Euro is now. Rules are met. Take a trade. Next question about S&P 5-minute chart. So again, if you're joining us in a trading room, everything is in live markets. No need to wait long term, you can see the accuracy of the method instantly in live markets. So this is S&P 5-minute chart. This is where S&P 5-minute chart is struggling, as you saw on 3-minute chart as well. Look at that. Not the place to buy S&P, the place to monitor for selling pressure. What is key on S&P right now to the downside? As you saw on weekly, as you saw on all the other charts, it's this support. This support is out. This is key support to monitor for long. Never acquire trend trade at reversal zone. It will never work. Stunning bullish rally ended here as expected. As it's done on Facebook, as it's done on Tesla. Identical structure on 5-minute chart. Not the place to buy. The only difference, this is your investment decisions on Tesla. This is your day trading decisions on S&P. My pleasure. Gold, let's take a look on gold. Let me see if I have any charts on gold open. If not, I will gladly set up a chart on gold. Here's chart on gold, traders. This is where gold is now. Chart present in the room for years. And let me remind you something extremely important about gold. Here's a couple of reminders going back memory lane on gold. Here we are. This was gold in 2016. Do you remember gold and 1000, trend inception, and then 1300? Do you remember that level? Do you remember what gold had done next? Moved up higher. Look at that. Shock or not? Are you surprised where gold is now? No surprise, as price spelled out years in advance. Do you want to trade delayed indicators, or do you want to trade the only natural predictive tool in the market? This was gold in 2016 at 1100. This was gold a few months later at 1300. And this is gold now. So, what to do with your position? You must know the rules. Key Fibonacci target is reached, as I warned you prior. It is key target on every single trade you take. Price not always make it to reversal zone if it formed 5-wave pattern and ended here. This is it. Price will reverse. Disrespecting this level, not an option. As you remember, to browse you down memory lane once again, this was the end of bearish correction on S&P, famous 1800 number in 2014, 2015, 2016, when price shown very clearly this support is being respected, price will head to drastically higher levels, which were reached 2 years later. Next question, US Bank Corp, you need to give me symbol. I don't know what the symbol is. What is the symbol? Please let me know. What is the symbol on US Bank Corp? Only symbols and time frames, please. USB. Every single trade you identify the stop and target. Every single chart in front of me give you different volatility, different stop, different target. You can have 5, 6, 7, 11 trades in front of you. You decide what the stop and target appropriate for your risk management and your account size. You can have multiple trades in front of you, from stops and targets from 1-point stop, 2-point target to 3-point stop and 5-point target. Multiple trades playing out at all times, not one, many. What your risk management and what your account size depends on you. Students in the course from few $1,000 account to hedge fund managers, 7-8 figure account. Every single trader chooses a trade that's appropriate for him and his account size. Here's another extremely important point. If, God forbid, you are trading with random speculative stop and target, it will never last. If it lasted more than a couple of weeks, it's a shocker. Nowadays, especially, we're dealing with extremely volatile markets. Price show you where the stop must be. On 5-point chart, the stop can be 2 points. On 7-minute chart, the stop can be 3 points. On 8-minute chart, the stop can be 11 points. You decide what chart appropriate for you and your account size. Very new traders make an assumption. Method uses exact same stop, exact same target. I would love to see that trader who survived more than few weeks in the market using that concept, especially in today's market. Speculation and day trading will never work. Fixed stops and fixed targets, never, ever, ever an option. So, question about USB coming up. So, first let me remind you where USB collapsed from. Beautiful, beautiful thing. Reversal zone on USB is reached. Major trend is present. Here we are. USB. That's where selling pressure came from. If there is a reason why buyers stepping in the last 8 weeks on USB, of course, always is. There is nothing random about markets. Price is sitting at the end of the minor trend. Price is in exact same place where Apple was before earnings. Market is frozen. And this is a key. This is where price testing you to the core. Right now USB in massive correction on weekly. Will this correction become spectacular reversal like Apple had done? That would be so lovely. But only if rules are met. Absolutely nothing exciting about USB right now. This is meaningless correction. We have 50% buyers, 50% sellers. However, the most important support you will ever find is present in front of you. And that's the key. Price testing you for knowledge of price action and Fibonacci. Any other questions, traders? Please do ask. Just to remind you, this is where euro was in 2016 when euro was at 105. And this is where euro skyrocketed to when found selling pressure on hourly chart 2500. This is your day trading resistance 2500. This is your institutional support. Identical strategy. Very different hold time, very different screen manager. Thank you so much, Faith. So, few more questions. Let's take a look. And so here's a question about feeder kettle daily. This is a question I had not received in 10 years of doing this. This is exact same sequence, exact same reminder. Doesn't matter what instrument you trade. Reversal zone is reached. Exit the position. Do not acquire the position. Feeder kettle daily collapsed from reversal zone. Let's take a look and let's see what to expect on feeder kettle daily now. This is where feeder kettle weekly right now at key Fibonacci support. This is ultimate Fibonacci resistance 148.2. This is institutional range. These two levels 142, 148. This is ultimate resistance. This is ultimate support. This support is out. Feet are daily in free fall to here. At reversal zone, you're monitoring for trend inception. Absolutely no surprise where buyers came from. And then you convert this chart to daily if you want to trade with institutions and not against them. That's simple. That's a channel on daily. That's ultimate reminder. Market formed by Fibonacci puzzle. Any other questions? Please do ask. My pleasure. So, what you witnessed throughout the webinar, every single instrument has exact same sequence. Every single instrument has exact same pattern. So why not go to the core? Why not go to the source? Why not go and master price? Price for entry and Fibonacci for exits. That's all there is. That's applicable to every single market on the planet. You don't need to pay indicator fees. You don't need to search for software that works. You simply need to master price. And if you do, all you have to do is identify what's appropriate for you and your account size. Is it day trading NASDAQ? Or is it position trading oil? Or is it option trading Apple? Choice is yours. Every single thing you witness throughout the webinar applies to. So, if you would like to join us in a trading room, pretty please, you can subscribe and witness market method in live markets. Monday through Thursday, trading room is open. Fee only $27. If you would like to learn the method, all classes are live. Group class 8 weeks, private mentoring 16, includes all group classes. Friday, very important class, and we start from scratch next Monday. So, any other questions? Please do ask. No other questions. I wish you a joy-filled afternoon, and I always look forward hearing from you. info@fibinstitute.com 925-257-4298. Never hesitate to contact me. As again, question about Euro. Euro at reversal zone. Sell-off exhausted. You know the rules. Monitor for bullish point of entry. As you remember, I brought up to you chart on oil. Do you remember that? Walking down memory lane? That oil done identical dance when oil was at reversal zone. Rules are met, take a trade. That played out on oil. Will that play out on Euro? Only you will know, if you know the rules and apply the rules learned in the course. As price reverses from reversal zone 80+% of the time. Oil had done so. Will Euro do so? Highly possible. Only if rules are met. And that's market puzzle. And that's identical structure you witness on all the instruments we discussed in the room. So thank you, ladies and gentlemen. Thank you so much. Again, pretty please review all the information on the website. And after you review the information, do not hesitate to contact me. And again, favorite part of the website, always and forever, what students have to say about course. Students become my dearest friends for life. And that's what it's all about. So, thank you, ladies and gentlemen. Thank you so much. Have a joy-filled afternoon. Brand new class starts May 14th. Ideal day is always join before Friday so you can come to long-term Fibonacci class and warm up over the weekend, review modules and prepare for class on Monday. Thank you, traders. Thank you so much. Have a fantastic afternoon.